Welcome to Market View with Ike Iosa and Friends. The show that not only reveals and analyzes the inside story on today's market news, but also uncovers the areas where investors can make money right now.
Good morning. Mike Iosa, your host for my guest, our very good friend, Mrs. Erin Swenlin from DecisionPoint. Hi, Erin. How are you?
I'm doing just great. I hope everything's going well for you too.
Yes, it is. Thank you. Erin, I was looking forward to speak with you today and get your thoughts on the technical status of the market, because look at the S&P. We have had 3 reversal days on July 27th, on August 4th, and also yesterday, although yesterday it finished like 1 point higher than the day before. Nevertheless, it was a reversal day. Usually this type of price action is negative. But if you look at price alone, it really hasn't declined a whole lot. If you look at the rally from mid-March until late July, that was an 800-point rally. So a 120-point pullback, it's nothing.
Yes.
So I'm curious to hear your thoughts.
Yes, I agree with you. I think the market got really overbought, particularly in tech, and we're starting to finally feel the effects of that with the decline. And you're absolutely right. I mean, if you look at the 5-month chart that I brought, price has really been in a trading range, since that breakout we had at early July. And its support is currently holding at the 50-day EMA and at those tops from back in June. So it's not really, it's worrying people, but I don't think it's worrying them to the degree that maybe they should be worried. I mean, you can see the indicators are just looking pretty bad. Unfortunately, I don't have stochastics on this chart, but stochastics have turned down in, below 20. Which is very negative. So I don't see this as a stopping point. I think that we're just getting going.
I think it could be a resting point on the way to lower prices over the next 6 to 8 weeks.
Yes. I mean, that's kind of with this consolidation and sitting on support, certainly. But I don't think that this is it. I think that we definitely have more downside.
Let's move on to the next chart, which is the swirling trading oscillators with the ITBM and the ITVM.
All right, so this is an interesting chart because the last 2 days, our Swenlin trading oscillators have started to turn up, which was really a surprise to me when I went to go write about these charts. That was pretty shocking to me that we saw them rising on a declining day. Yesterday, not so much of a surprise because we did at least have a tiny rally. But the main thing is we're not putting a lot of emphasis on that because there are so many other problems. And these Swenlin trading oscillators are pretty good about nailing, short-term bottoms and tops. But I don't think that it's right this time. And I think that, we're seeing a lot of bullish indications that aren't really fulfilling. When you start seeing your bullish signals or things that are bullish that you should expect an upside move. I mean, we had an upside initiation climax on Monday. Well, you can see how that turned out.
Yeah.
So when you have these issues happening like that with your bullish signals and they don't perform, you've got a bearish bias and there's really not much that can be done about it. Those intermediate term indicators continue to fall. They're in neutral territory. They've been overbought for a really long time, but they're not confirming those rising indicators, those Swenlin trading oscillators. So at this point, we're not reading too much into those short-term indicators rising. Participation is slimmed in the market, and we just don't like what's going on.
Okay. You mentioned bias, so let's talk about our bias chart.
Yes. So the bias chart has 2 indicators at the top. And there's the second one I'm going to talk about first is the Golden Cross Index. So what we do is, most of the time everybody looks at how many stocks are above their 20, 50, and 200-day EMAs. With the Golden Cross Index, we decided to take it a little step further and actually see how many stocks have a Golden Cross or a 50 above the 200. And that gives us a lot of insight into what's going on. technically in the longer term. But we wanted to have an intermediate term indicator as well that would do similar things. So that's Carl named a 20-50-day EMA crossover as a silver cross. So now we can look at how many stocks have a 20-day EMA above the 50-day EMA. They have a bullish bias if that's the case. So we want to see how many of those stocks have that bullish bias. And at this point, the big problem we had with that indicator, the Silver Cross Index, was what we call a bearish shift with that crossover below its signal line. Those are usually really solid indicator. We usually see that before a decline, a correction, certainly. And, the only time it didn't work out was back in April. We had a top, we had that negative crossover. We were very bearish on the market at the time, and the Silver Cross Index continued to fall, and yet price really maintained. That was, of course, due to the mega caps that basically led the market. And so we kind of were on the wrong side of the market at that point. But we immediately switched positions when we got that Silver Cross Index with the positive bullish shift above the signal line. So that was when we got bullish again. Now we're bearish again because of that shift to the bearish side by the Silver Cross. Now, I will say, the Golden Cross Index is at, almost 70% here, which is good. So to me, that says that, our bull market in general isn't necessarily a chance of that going away. I think we still have a bull market that we're going to get to enjoy for a little bit longer. But right now, we're in correction mode. And more than likely, this pullback will turn into a correction based on what's going on with that Silver Cross Index. And you can see when you look at the prices above the 20, 50, and 200-day EMAs, that continues to bleed. And so if you don't have that participation under the surface, if you don't have those stocks available to make the turn, then you're just going to see things continue to deteriorate. And those particular indicators, the percent stocks above the 20, 50, and 200, you can see are not oversold. They can definitely accommodate more downside.
Our next chart is XLV, the S&P healthcare sector, which has been in a lot of consolidation for quite some time now. What are your thoughts on healthcare?
So I pulled up the healthcare ETF to show you because other than energy, it's the only one with a rising price momentum oscillator.
Okay.
And so it seemed the place that, maybe we need to start looking over here. And I do see some new momentum, but at the same time, I'm not seeing the price action I want. Still, I think that there are some opportunities within healthcare. You can see that the percent of stocks above their 20-day EMA, which is like the fifth indicator window down, that's actually getting a little bit of a rising trend now. So we're starting to see some participation expanding in that intermediate term time frame. And so I'm thinking that this is going to be an area that's going to see some love with the decline. It's a defensive area of the market. I think there's some opportunity here, but I have to say, when I went in and looked at all the industry groups within healthcare, there are a lot of groups that don't look good, but there are two that I think look pretty good right now, and biotechs being number one, and number two, pharmaceuticals. I think that industry group looks pretty good right now, too. I like this area right now, but at the same time, the healthcare sector chart doesn't look completely bullish, and I think that's really due to the fact that there are so many industry groups, unfortunately, within healthcare that aren't doing well. So we really have to zero in on where the strength is within this sector, because something good's going on. The fact that the price momentum oscillator gave us that crossover buy signal.
Okay, let's take a look at the IBB chart, the biotechnology ETF.
Right. So I figured I would bring this because, like I said, I think it has the best look as far as those within healthcare. it still hasn't matured to the degree that I would like to see. And let's face it, it's been in a trading range for quite some time. It's sitting right in the middle of it, so it's, it could go either way at this point. But we have that short-term declining trend that's been broken. Price needs to get above that 200-day EMA for IBB. I'd really like to see that happen. But, you've got a PMO that's now turned up. You have, if you look at the participation of stocks above their 20, 50, and 200-day EMAs, that's starting to improve. You've got stochastics on the rise. So I think this is kind of an early look at a place that might have a pocket of strength where you might be able to start finding some stocks within. And that particular group is so full of stocks. It's really hard to pinpoint the best ones, but I would recommend just keeping an eye on those PMOs. Look for breakouts. Look for upside momentum. Make sure that you've got stochastics going the right direction. And in particular, you want to make sure that your relative strength is looking good of the stock against its group. So I did bring a stock within biotech that I put out yesterday for our subscribers of DecisionPoint Diamonds. That's where I give 10 stock picks with ETF day on Wednesdays. So you get 10 stock ETF picks per week with DecisionPoint Diamonds. And so I brought NBIX as a chart for you to look at and everybody else to look at. So I really like the setup on this biotech. You've got a flag formation. You've got a really strong breakout from that bull flag. Currently, we're seeing price above the top of that flag, so we're getting confirmation that that flag is good. We have an RSI that's positive right now. Granted, it's getting a little overbought, but overbought conditions can persist. If you've got a bull market configuration for a particular stock. I really like the PMO surge above the signal line. I call a PMO bottom above the signal line a surge in the PMO, and we've got that. Stochastics have turned up. And like I said, most importantly, the very last indicator window, we're finding a stock that is showing leadership amongst the group. And I think that's very important right now. If you're going to start looking for biotechs, you want to make sure you're finding those that are holding leadership within that group, because there are plenty out there that are not doing that, and plenty of them that may look very attractive, but they aren't performing very well against the group. The group is finally starting to show relative strength, so you want to get those stocks that are already showing strength within the group. And so that's what I found with NBIX. Admittedly, this was a reader request yesterday, and I get reader requests for Thursdays, and I had picked this one out because that reader really found a good one. I think this one has a lot of upside potential.
If it breaks above 105, the upside target, the first upside target is 112.5. So if somebody has gotten in a little bit above 105 and the stock rallies to 112.5, there is lots of cushion there. You got 7.5 points cushion to decide what you're going to do next while putting a stop a little bit above your entry price.
Yes, exactly. And, you want to make sure that it continues to show that leadership. Some might look at this chart and look at the PMO as being overbought. I would take issue with that because we've definitely seen the PMO on the negative side get down to -4, -3. So that gives us some cushion there as far as the PMO moving higher without being overbought. So it's not really overbought right now. I just see a lot of new momentum on this stock, and I like it. So hopefully it will follow through as I'm expecting it to.
Erin, anything else you'd like to add?
Well, I would say that if anybody out there has not gone to our website to check us out, we have 2 great products. We have the DP Alert, which goes over charts like I started with today and gives you the outlook overall for the market. We also cover Bitcoin, gold, dollar, oil. All of that is in the DP Alert, and you get that every market day. And then there is, like I was saying, DecisionPoint Diamonds, where I give you those 10 stock picks per week. If your viewers are interested in getting a free trial to our products, I would recommend that they try that. You can get an idea of what we have. You can quit the trial at any time and you won't be charged. All you have to do is use the coupon code DP Trial and the number 2. So DP Trial 2. If you use that coupon code, you'll get free 2 weeks of those reports, so you can try them out and see if they're for you. But I think, having that update on the Silver Cross Index every day and getting those stock picks that are going to ride the tide, I think it's a pretty good package there.
I wholeheartedly recommend it because I believe for people who are technically oriented, the information is fantastic.
Well, thank you so much. I appreciate that.
And have a great weekend.
You as well. Bye-bye.